Hello and welcome to this week's episode of Help with Homework. I am your host, Professor Smith. I think Brian Smith. I like being called Brian, not Professor Smith anyway. All right, let's go ahead and start chapter 9 problem assignment and have a see what we can do here, right? We are dealing with accounts receivable and dealing with the different methods in chapter 9. Just wanted to make sure we're doing that. All right, so here we're going to start off kind of taking it slow and just doing the journal entries that we need to do. Um, we need to record a year-ending adjusting entry to estimate bad debt expense. In its first year of operations, CloudBox has credit sales of 230,000. Its year-end balance in accounts receivables 13,000, and the company estimates that 3,000 of its accounts receivables is uncollectible. We're not asking you to do any calculations with this one when we're asking you to prepare the journal entry for this. We're simply going to debit our bad debt expense. When we say we're going to estimate about 3,000 bad debt expense, and sorry, I was just cleaning some of this stuff up because it's in the way. We've said $3,000 of its accounts receivables uncollectible, and then we're going to credit the allowance for doubtful accounts for $3,000. Okay, let's go to requirement B. And prepare the current asset section of CloudBox classified balance sheet, assuming all this information. The company reports accounts receivable net on the balance sheet. All right. So current assets, we're going to start off with cash. We always start with cash. I don't care what they listed first. 21.5. And then we're going to do inventory. It was 29,500. Prepaid rent, 3,750. Then we're going to do accounts receivable, 13,000. But it's 13,000 is there, but we had $3,000 that was uncollectible. So we're actually going to put 10,000. Let's check our work. Again, this 10,000 comes from what we did on number 1. We had $13,000 in our accounts receivable, but net of it means we're going to reduce it by the amount of our estimated bad debt or allowance for bad debt expense, which was $3,000. Okay. So this problem is correct and complete all the way through. We're looking good. Let's go on to the next question. Quarterly estimate of uncollectibles. Warner Company's year-end unadjusted trial balance shows accounts receivables 103,000. Allowance for doubtful accounts, credit balance of 640, and sales of $320,000. Uncollectibles are estimated to be 1% of sales. Prepare the 31st. Okay, we are 1% of sales. So we're using the sales method. So we're going to take 1% of this, which all you got to do is move the decimal over twice. So it should be $3,200. So we're just going to go debit bad debt expense, $3,200, and then credit the allowance for doubtful accounts. Too easy, right? Too easy. I say that because of the military. We would do this like absolutely, completely, ridiculously hard task, and our drill sergeants would always say, "Too easy, right? Too easy." Sorry. So a little bit of carryover from that. Number 13, Macy's Supply Company uses the percent of accounts receivable method. Oh, this will be fun. Prepare the year-end adjusting balance. Okay, so we have accounts receivable of 89,000, and it's estimated that 4% will be uncollectible. I might open up a spreadsheet for this one, just in case, so we can kind of keep track of some things. If it will open up. All righty here. Let's go ahead and open this up even more though. All right. So what we're going to do here is we want to track our accounts receivable balance. All right. I'm going to make my T account real quick. And then this is our accounts receivable, right? Remember, what we're going to deal with here is letter A. Is we have a credit balance on our allowance for doubtful accounts. Let me just copy this. I'm just going to put allowance, not allowance for doubtful accounts. So right now we have $1,513, okay, in our as a credit balance. And it says 4% of our accounts receivable will be uncollectible. So what we're doing is we're calculating the ending balance here on our accounts receivable balance. Right now our accounts receivable sits at 89,000. We're going to come over here, take that number and multiply it by, and you know what? I'm going to just put that up here. Boom. So you can create this as a model if you want. And I'm going to say, so that's what our ending balance needs to be. All right. So we're going to go over here and we're going to say our adjustment, adjustment, okay, is going to be equals sum all this, subtract the sum of all this, and we need I think this will work. I'll explain this in a minute. Not necessarily what I'm doing here with the. No, that's right. That won't. I can't put that in there. So I sum all that up, and then I need to take this minus that. That's what it should be. Okay. So I just set this up basically so that I think it will work if we are going to just plug in stuff and it'll actually work throughout. So bottom line is we have a credit balance here. We need to get to a credit balance of 3560. And what we need to do is we need to take whatever's in the allowance account. In this case, it's E is bugging me. The credit balance here. So if you think of a number line, all right, I'm going to do this number line really bad on this, okay? And then if this is 0.0 right above here, this is the debit side. This is the credit side. So we're sitting at, on the credit side, at 1,513. We need to get to 3,560. We need to get there by getting 2,047 toward the credit side. That's what we're saying here. And that's all we're doing here is we're trying to get from this credit to this credit. And what it takes is for us to take this balance and subtract this out to get this. I'm sorry, I'm rethinking my formula here. I think I need to add this is what I need to do. All right, so now it'll work right. Anyway, so we come over here to our journal entry, and we're going to do a bad debt expense or 2047. We're going to credit the allowance for doubtful accounts for 2047. Just for you guys, let's check our work. Wait, we're good. We're not complete though because we have the second scenario. So if you set up a spreadsheet the way I just did it, kind of quickly and yet haphazardly, this should work. If I take this and put our new debit balance of 445 in there, boom. What happens is now we're sitting over here on this side of the number line on the debit side, and we're at 445 away from zero. So now we need to go this 445 to get to zero, and then all the way to this 3560 to get to where we need to be on the credit side. So we're going to take this number and this number and add them together to get our adjustment this time. And that's what we're demonstrating with this number line here, is showing you that if we have a debit balance on the allowance account and we're making an adjustment, we're trying to make it have a credit balance, we're going to have to go farther than if we already have a credit balance. That's all I'm trying to demonstrate here. So with that, and with the way I set this account up here to find out what the adjustments are, and now you can see here that this works, and it can work in any situation. So you can create this model and use it. I have no problem with that. We're going to go to this debit here, and we're going to debit bad debt expense. I hate how they say bad debts. I know it's probably more than one, but I don't know. I don't like it. Allowance for doubtful accounts. That makes sense because there's multiple accounts. 45. All right, so let's check our work. We should be good to go. So one of the things I like to do is create models with Excel. So if you are not proficient with Excel, hopefully by me showing you how to do it, it will be something that you can learn. If it's something that you also enjoy doing, then it definitely works for you. Okay, and what we want to make do. All right, so what we're going to do here is we're doing, I can already tell we're doing the percentage of past due. Oh, crap, I can't remember what the name is. Aging, that's what it was, aging of accounts receivable. The theory behind this is that as a person takes longer to pay off, the less likely they're going to pay. That's kind of the idea. So this company has that if it's over 90 days past due, then that's 13%. Okay, most 13% of people are going to be past due on that. So I could create a really cool model with this. I honestly, and I would have fun doing it, but it's going to be complicated, so I'm not going to do it. So all I'm going to do with this one is just be able to tally our amounts here and do the calculations. So we have BCC Company, Lannister, I'm just going to Mike, Ted, and Jen. I don't need to care about those. We have 5500, 2500, 6500, 1200, 3500. All right, so let's look at BCC Company. They're 12 days past due, so they're going to fall under the 4% category. Lancer Company is 0, so they're going to fall into the 2%. Mike Products is 105, definitely the 90-day past due. Ted Reeves is 82, so they're falling into the 61 to 90 day, so we're going to do 9%. And then Jen is 45 days, she falls into the 6%. Oh, look, one out of each category. What luck. Okay, so what we're doing here is we're going to take the total amount that's owed, multiply it by the percentage that we gleaned from the chart up here, and we're just going to calculate across and multiply the amount that's due times the percent. And what we're going to do is come up with the total sum of this amount. And this is the ending balance of what we need in our allowance for doubtful accounts. Okay, so we need a total of $1,433 in our allowance. Is that what I calculated? Yeah, 1,433. Okay, so then the next one is the journal entry. If we have a credit balance of 250, see, this is cool. See, this is where you get to go back to this other sheet, 1433. I gotta move my picture. So we're gonna go 1433, and then we're gonna go 250. This is where you can use this model and on almost everything, and you just boom, there's your adjustment. You need $1,183 to make this adjustment. We're already on the credit side at 250, and we just need to get to 1,433. So we're gonna need an adjustment of 1,183. 1,183. 1,183. Bad debts expense, allowance for doubtful accounts, and let's check our work. Models are really cool. You can really do a lot of quick work with things if you can build the models and have them work right. All right, the last one is a doozy, and it's meant to be a doozy. I do this very much on purpose. This is the last one. It's a hard one. You're going to have to go through 2 years. And I recommend doing it this way, where we're gonna track our accounts receivable and our allowance for doubtful accounts. I'm gonna just put this up here. Hopefully that's not gonna bug you guys. If it does, sorry. And so I'm going to take this. place it here. So we're going to have 2 years of adjustment. So this first one will be adjustment for year 1. This one will be the adjustment for year 2. And then I'm going to put a line there. All right. Kill this. Sorry, I'm thinking of what I got to do. Okay, I don't think I got to do anything. So here we go. Let's start off with this. All right, in year 1, we sold this much on credit. Cost had $977. Okay, so we're doing journal entries. So we're just going to do this. On credit, we sold these, so we're going to do accounts receivable for $1,345,200. This is the sales side. So we're going to do sales, okay, for the same amount. The next journal entry is going to be on the same date, is going to be dealing with the cost of goods sold. Cost of goods sold, it's going to be $977,000. We're going to credit our inventory, merchandise inventory, for the amount that it says. What we want to do is come over here now, and we want to track our accounts receivable. For $1,345,200. Go to problem or question number 3. We wrote off $21,400 of uncollectible accounts receivable. So we're going to debit the allowance for doubtful accounts for $21,400 and then credit the accounts receivable. Okay, we're not funding it right here. We're writing these off. And that's why we're not going to do our bad debt expense, because that's only when we fund our allowance for doubtful accounts. Well, in this scenario, we don't have anything in our allowance for doubtful accounts. So we're starting off with a debit balance, or not a debit balance, first off, we're starting off with a debit here of this $21,400. No big deal. It's just what we did. But we also wrote off our accounts receivable here. So let's go ahead and put that as a credit. We received $665,100 cash in payment for accounts receivable. So we're going to debit cash because we got the cash. We're happy. We wanted money. And then we're going to credit our accounts receivable. All right, so let's go over and do this. And you could do this on paper. You don't have to do this in Excel. It's just going to make things a lot easier when you're doing it in Excel. In adjusting the accounts on December 31st, the company estimated that 1% of accounts receivable would be uncollectible. All right, that's pretty cool. So let's find out what our balance is here. Year 1 balance, we're going to take our initial balance and we're going to subtract out the write-offs and the collections. So our balance now is $658,700. Now we said 1%. So I'm going to come up here and I'm going to change this to 1% for ease of use and actually get it so that we're all on the same page. I get it. Dad joke. All right. So we want our first balance to be 1% of that. Okay, so our adjustment needs to be $27,987 to account for that which we already wrote off and to get us to the balance we need to be at. So let's go ahead and do our journal entry over here. We're going to do bad debts expense and then credit the allowance for doubtful accounts. And I got to remember what the number was. $27,987. Okay, let's check our work, make sure we did it right to this point. Good, looking good. It's not complete, but darn it, we're good to go here. Let's go to year 2 now, okay? We're going to return to the question. Year 2. We're doing it all over again. The problem is right now, our beginning balance is this credit balance, right, on our allowance for doubtful accounts. So, and we still have this carry forward from our accounts receivable. You've got to account for those things. But basically, all these journal entries are going to be the exact same, all right? So let's go ahead and do this. Accounts receivable for $1,579,100. Sales. We know it's on credit, even if it didn't say it's on credit because of the credit terms. If it's got credit terms, it's a credit sale. So let's come over here. We're going to add 1579100. Now, I'm not putting all of the T accounts, only the ones that we worry about, which in this case is the accounts receivable and the allowance account. I could be doing the sales, T account, all these other things, but I'm not simulating posting these. I'm just trying to track these. Record the cost of goods sold of the sales. So cost of goods sold, 1,313,600. And we're going to credit the merchandise inventory. The same amount. Sorry, I'm kind of up a little too high there. All right. Write off $33,700. So we're going to write off $33,700. Okay, debit to allowance account, $33,700. Credit accounts receivable, same amount. Okay, we received payment. So we're getting some cash. And we're going to credit the accounts receivable because accounts receivable is no longer owed. They paid us. Let's update our accounts receivable. And then last one is 1% is collectible. So we're going to get another balance here. We're going to sum up both beginning balance plus sales, credit sales, minus our write-offs and collections. So our balance now on our accounts receivable account is $887,400. We need an ending balance here of $8,874. So the way we're doing this is we are taking our credit balance here and reducing it by our debit balance to have a debit balance, and then we need to get from that debit balance to this credit balance. So let's go ahead and see if my model worked. Okay, bad debts balance for doubtful accounts. What was the number again? 8874. 8874. Let's check our work. Oh, my number went off. Let's find out what went wrong with my model. What did my model do that we did not want it to do? Okay, that's what we needed. We want this to subtract it. We wanted our model to take this number, and we needed to add this number and subtract this number. So I don't know why it didn't work. Well, let's do it manually, okay? So we're going to take 33,700 minus 6587, and then we need to get from that to this. Well, my model worked. It's just I did a calculation error somewhere. Accounts receivable. We have our beginning. I may have typed in a number wrong or something, even though all those showed right. Oh, it's because I put in 8874. It should have been 35,987. You guys are probably screaming at your computer right now. Brian, it's not the right number. You did it right. It's just you put the wrong number in there. I'm so sorry. It was 35,987. 35,987. I was so excited to see my model work, and it did work. It's just I, looked at the wrong number to put in there. So it worked. Okay. All right, so that is it, okay, for this homework help. I hope that helped, and hopefully that last part didn't throw you off too far. But you see, I started kind of going a little fast with it. Whenever you go fast, you tend to make a mistake. Anyway, so slow down, get your homework done, and hopefully you enjoyed this. If you guys have any questions, please let me know. Hope you guys have a good one. We'll see you guys in some future videos.